India has changed a lot over the last 10, 15 years, right? And I think a lot of it to do is also with the internet coming in and enabling a lot of things, changing mindsets as well, right? I would just hope that a lot more women understand, accept and support women. Investor mindsets of long term are also shrinking. So it does not mean 5, 10 months or a year. Because world has also become so dynamic. I don't think post-COVID we've had 1 year which has been normal. A couple of themes or sectors if I had to name as, manufacturing is one because almost 2/3 of our population will be working. Now when you have a population that large which will be working, obviously they will spend, right? So consumption will pick up. Today a theme may do well.
Yeah.
But there are so many fads and narratives which get built,
Right.
actually which are the party spoiler. So one must stay away from fad. I don't think one should invest out of FOMO. Fad and FOMO today are, very, very big.
And suppose there's a very young woman, a new jobber, who says, what my father tells me to save money, but I don't know how to invest. So to that girl, what, from your own experience of how you started when you were a young girl, आप क्या उसको बताओगे कि अगले 3 से 6 महीने में these are the 3 steps आप ये करोगे ना, then you can start your investment journey. Welcome to yet another episode of Bazaar Beyond, where we deep dive into the ideas, people and trends shaping India's markets and money conversations. I'm Supriya Ghosh, Head of Brand Marketing and Communications at m.Stock by Mirae Asset. Our guest today is Swati Khemani, founder and CEO of Carnelian Asset Management and Advisors. In this episode, we'll talk about her journey in markets, how women can think about investing in risk, and what it really takes to build confidence and careers in finance. Swati, thank you so much for joining us today, taking out your valuable time.
Sure, thank you, Supriya, for having me on this show today. And I think for me also there's a very important one because it is all about women. So very happy to do this show today. Thank you.
Nice. So let's start with you before we zoom out to the markets and also women. Swati, you are a CA yourself and you have had such a splendid journey of 23 years. What were the defining moments in your career that led to this day, you as today, and how you see Indian market today?
I think I'm very grateful for all the twists and turns that happened in my life which shaped this whole journey. And it is, I think, responsible for where I am today, and thankfully so. And I think it has just made me a big believer of, furthermore, a big believer of hard work and destiny both put together. So like you mentioned, I started off as a CA. So I started off in 2002 and I joined Edelweiss as an associate in their investment banking division. And in those days, Edelweiss was, there were a lot of, most of their employees were, MBAs from IIMs, very sharp, very intellectual. And, I think that went a long way in shaping my journey. It was very intense. But I think it was very, very crucial that in my formative years to have got this kind of experience.
Right.
So I think investment banking allowed me to understand more of what companies did from within. So, whether it is their strategy, whether it is the promoters, whether it is their fundraise, all of it put together. So I think over those first 3-4 years that I did investment banking, it helped me develop a lot of those skills and very sharp, razor sharp, very detail oriented. And subsequently I moved on to the public markets. So I started doing research and I started off with textiles because in 2005 the textile quota opened up and it was, expected that this will become a big sector for India and, there will be a lot of growth there. So that is the sector I started off. So from private markets, investment banking in those days was largely restricted to private companies, at least what we did at Edelweiss. So from there on, I started off my journey to public markets. And I think that is where actually, my love and passion for markets started, because that is where you started actually, delving into each company's business models, promoters, managements, the way they thought, competition, everything put together. So it kind of gave a more holistic and a different flavor from what I had done initially. But I think that also went a long way in defining this journey of public markets. And then subsequently, I also did, institutional sales. So, all the theoretical knowledge, whether it was through investment banking or through research. Obviously, there was a practical aspect to it, but when you met investors, across the globe, I was covering Europe and Asia then, it gave a very different perspective of, finally putting a light to things the way I analyzed it and how, investors actually perceived it. So I think this overall journey of, going through these different aspects of life, all added to those defining moments in my career. And ultimately, when we started off, our entrepreneurial journey in 2019 with Carnelian, I think all of it just naturally culminated for me because it was a great combination of, having an investment banking plus research background and also sales because, having two things, if I can pick up, which clearly defined it was, rigorous hard work and appreciating the entrepreneurial spirit. So today, these two things just go in defining every decision that I make, as an entrepreneur today myself.
So actually, you touched upon my next question. My question was, you started Carnelian, but did you see any gaps in the market because of which you started Carnelian in 2019, or was it like a natural kind of progression in your journey?
So to be very honest, I think a lot of factors went into why we started off our entrepreneurial journey. So coming from Gujarati Marwari families, there was always, this inherent desire to start off on our own. So there is a joke in my family that, we don't work for people, people work for us.
Right.
So
I think it's
it
a
was
very common
always
saying in
yes,
Marwari families,
yes,
especially.
and all of us come from business families.
Right.
So eventually that was what was always the thought process was, and I wanted to start off on my own. And even when I got married, I was very clear to my husband that someday we will start off on our own. We will have our own business. So that was one thing. When we got married, we didn't know anything else, but this was one desire which we both had, and I think gradually it took shape a little later in life. Of course, there are a lot of other things and factors which one needs to keep in mind, ensuring that you've made enough capital for yourself, because ultimately once you get onto the entrepreneurial journey, things change and they change drastically. So, however, we maintain a very simple, humble lifestyle. So I think we were far more comfortable with what we had created than I think we will need. So that is what also gave us the confidence at that point in time that, it was a good time to start off. So that is how we started off our journey. And our idea always has been that, we want to create something of our own, which when we look back, we take a lot of pride in. Of course, we have our kids, which bring us a lot of pride. But besides that, we wanted to create an organization and of a global scale and stature, which is known for its quality, is respected for its excellence and expertise. So with that mindset, today, whatever we do at Carnelian, it is our ethos. Anybody who joins Carnelian also follows or, gets into the same, DNA. So with that purpose, we started off Carnelian.
You mentioned about your home background and how you got married and you decided to kind of already have this dream of having a shared dream with your husband, having something on your own. Did you ever face any challenges on the home front that, usually Marwari families, my friends from Marwari families, they were not allowed to work post-marriage. Did you face anything like that?
So I think on this count, I've always been very, very fortunate. I was born in a very liberal Gujarati family, and education was a must. To be independent was must, financially independent. And so I think I grew up with that mindset. And fortunately, in my husband, I found the same mindset. So I think it made things very, very easy for me. And he was always there to support, encourage, and make sure that, I could continue doing what we always wanted to do. So to answer your question, I have been lucky on that front.
Nice, and I'm sure many women are inspired by what you're doing.
I would just like to draw one thing here is that today a lot of, India has changed a lot over the last 10, 15 years, right? And I think a lot of it to do is also with the internet coming in and enabling a lot of things, changing mindsets as well, right? I would just hope that a lot more women understand, accept, and support women.
Right.
Because I think today, also in our families or in the Indian context, you know, woman as a daughter in law has a little different set of expectations and responsibility versus a daughter. And I think if the two get together, I think women can do wonders.
Yeah.
So I think
We need more women supporting women.
we
in
just
this.
need women
Yeah.
to support more women.
Yeah. So now coming back to the professional front, in your journey of leadership, especially in finance, we all know, right? There are far and few women at the top. So what challenges did you face? It could be structural, cultural, or even like, internal organization level challenges across all the organizations that you've worked. And how did you navigate through those challenges?
So see, even while I was doing my CA and articleship, I very early on realized that not everyone thinks like probably the same way, right? So even if I had a family which was very liberal, which was whether it was education, whether it was work, and they took me seriously for that, it's not the same in my uncle's family as well. So just two families from the same branch can be very different. And I think that allowed me, through my CA days, I did a lot of audits. So I visited a lot of, businesses, met a lot of promoters. And every time I met people, I realized that the perception about women was, was not at its best. This was, late 19, towards the end of 90s and early 2000. And by what I meant is, first and foremost is the seriousness that we communicate.
Right.
I don't know for what reason. It was always that probably they took things when came from men a little more seriously. Of course, women were always considered sincere, diligent. But finally, when it comes to the outcome, there was always,
Right.
we will discuss it with the management or,
Yeah.
we will speak to
Right.
your bosses. So I always somewhere felt that, that's not fair.
Yeah.
And this challenge, I think, has diluted quite a lot over the years, over the last 20 years. But I still do see that in some form where the only challenge which I feel is still, the seriousness with which women are viewed.
Right.
And I think that also has to do with women building confidence, women coming out and talking, women asking. I think in India, in Indian scheme of things, women don't ask. So I think men also need to get a lot more confidence, or the society as a whole needs to get that confidence. While on every count, women has given them a lot of confidence.
Yeah.
But I think where this financial
Yeah.
independence or decision making is concerned, that is where I still think there is
A lot of gap, a lot of work needed.
there is work which women we need to do.
Yeah, yeah.
So
I mean, you're not completely off the mark. Even now, even today, there are brands who are making ads in this financial. I will not name the brand, but in one of their ads, the insight that they have picked up is, if a woman gives a financial advice, the person who's listening wouldn't take it seriously. But to just drive that point, the brand changed the woman's voice to a man's voice, and suddenly the recipient is taking it very positively,
Yeah,
or
I'm
even
not
understanding
surprised.
it. So it still holds true. I'm sure back in the day it would have been much more.
I think you learn to grapple with it. I
Yeah.
think women tend to learn to, understand, compromise
Yeah.
the situation, navigate it faster. So
Yeah.
I think you get over it.
Yeah, yeah, yeah,
So-
yeah. Okay. Now, just switching gears a little bit towards the equity market की तरफ बढ़ते हैं. So आपने इंडियन मार्केट को बहुत अप्स एंड डाउन्स में देखा है, बहुत सारी साइकिल्स देखे हैं. आपको क्या लगता है कि स्ट्रक्चरली आज के डेट में इंडियन मार्केट्स में क्या डिफरेंट है, बी इट द टाइप्स ऑफ कंपनीज दैट आर गेटिंग लिस्टेड, और द क्वालिटी ऑफ इन्वेस्टर्स, और द मनी इनफ्लो आउटफ्लो, एवरीथिंग पुट टुगेदर? व्हाट्स योर व्यू?
See, over the last 20-25 years, Indian markets में बहुत बदलाव आया है. There has been a lot of change. पहले Indian markets were much narrower. Whether you take it in terms of depth of the market, breadth of companies. I think everything, even the investors, everything has undergone a huge change. Governance was evolving, retail participation in those days was limited. Foreign participants, basically FIIs, dominated the whole narrative. Today that has undergone a huge change. आज आप देखोगे the whole promoter mindset has changed. Quality of businesses has changed. Promoters today no longer think short term. They all think in terms of governance, in terms of global opportunities, in terms of quality, longevity, capital efficiency. So, entire promoter mindset has changed and is changing. और दूसरी एक चीज़ क्या होती थी, first a lot of companies were, old economy, lot more family led, lot more promoter run. But today that is changing. Lot of companies also have professional managements which are coming on board.
Right.
So, from the company's perspective, management perspective, these changes, there are a lot of these kind of changes we have seen. Dusra, like I mentioned, the breadth of the market has increased. Today, there are a lot more sectors which were not available earlier to invest. So, say for examples, fintech companies hai, B2B companies
Tech
hai,
startups ho gaye.
then your CRAMS is there, defense, logistics.
Right.
So, a lot of these companies earlier, there was no breadth. Or, they were a handful or they hardly existed. So, today a lot more breadth is there in the market for people to invest. So, that allows investors to, have a very build a very nuanced portfolio with, upcoming themes, emerging themes, niche ideas, जो पहले बहुत कम थे. Thirdly, I think market participants. So, pehle, like I mentioned, it was, only FIIs who dominated the scene and the narrative. Like we've seen how, if FII pulled out money, we would see circuits hitting or, markets tanking by 5, 10, 15%, those kind of days and moments we've seen. But today that has changed because post-COVID humne dekha hai how the SIP culture has really kicked off.
Right.
And domestic participation has increased drastically in the economic, the equity market.
Number of
scheme.
demat accounts has shot
Absolutely.
up.
Number of demats, you see number of schemes available.
Yeah.
So all of it, basically the market is, I think, is maturing a lot, has matured quite well, in these 20 years. Today you also have PMSs, AIFs. So for each type and class of investor, there are instruments which are available. And to make it easy, I think technology has completely changed the game. So today I think if you just have a phone and obviously, all our phones are tech with internet, so you're able to open your account, you're able to trade from anywhere. It's just become very, very simple. Everything is integrated.
Yeah.
So technology has gone I think a long way and has changed things completely, in this count. And lastly and most importantly, I think, which is the most underrated thing is, SEBI's involvement in this whole, in creating this whole market. So over the years, they have done a lot of heavy lifting. Chahe wo in terms of disclosure norms hai, in terms of independent directors, surveillance, the company disclosures, everything put together. I think SEBI and on the other hand RBI both have done a phenomenal job in making the whole system structurally very robust.
And also in favor of the investors.
Absolutely. So today investors feel there is a lot more transparency.
Right.
You feel a lot more comfort in investing in equity markets. Otherwise earlier people used to, associate it with gambling, ya koi satta hai, that was the name associated with the markets. But today that is not the case.
Even youngsters are getting into the market.
And because of these initiatives which SEBI has undertaken, I think, no longer information, is available or accessible only to a few. There is a lot more transparency. Price discovery happens in a better way. Overall, promoters are also very mindful because they have a lot more, compliances now to follow and they know they are being watched. So, a lot of these things have made, markets very, very comfortable for the common man to reach.
Right.
So the breadth has increased. So I think overall, if you see whether it is promoters, whether it is companies, whether it is investors, whether it is SEBI, one common theme is everyone has come together to make this, a long game, a long play. So everyone's mindset and focus is that. So how best we can make it healthy and structurally amenable for everyone, I think everyone has contributed very well to this.
And from a long-term perspective, because you're saying all of these have put, kind of a very conducive environment for people to invest for the long term. If you're talking from the perspective of the long-term investor, what approach should they follow in terms of a framework which involves growth prospects, risk, strategy, and their own goals, right? What should they think about?
See, one thing I want to make it, I just want to clarify is long term should be 5 to 10 years at least. Unfortunately, today, because we live with Google, everything is at a click of a button.
Yeah.
I think
Patience has gone
investor
down.
mindsets of
Yeah.
long term are also shrinking.
Okay.
So it does not mean 5, 10 months or a year.
Yeah, of course.
Because world has also become so dynamic. I don't think post COVID we've had 1 year which has been normal, normal in terms of geopolitical situation, natural calamities. So, constantly something has been on. So I think whenever one talks of long term, one has to be very, very clear about the time frame of, a 5 to 10 year horizon.
Right.
Keeping what an investor must keep in mind, during this frame is that quality and longevity will go a long, long way. So while India is a transformative economy, growth is available, and it is available in lot of companies and sectors. But I think one has to be very mindful in the kind of companies one is picking. So whether it is the promoters, whether it is the quality of the business model, robustness of the business model, valuations, one has to look at it, as a whole basket. It's not that everything will grow. Yes, everything can grow, but you don't know how long that will last. And you don't want to end up in a situation where, you thought that it's going to do well, and,
Right.
because of your lack of understanding or lack of homework, it did not work well. So I think quality is very, very important on all aspects. And like I mentioned, longevity. Because only if you hold things long, real wealth is made only by holding long.
Right.
Otherwise, you're just going to make temporary incomes. And, outcomes are very, very different. So that is one. Secondly, I think one also needs to understand that consistency and discipline go a long, long way. So while you may have done your homework and invested, what is also important is to continuously keep evaluating it and revisiting it at different points in time. Because you may have made a good investment today, but maybe things change. It can be at a company level, it can be at a market level, it can be at a global level. So it is very important to constantly keep revisiting your portfolio.
Absolutely.
You should know what you have invested and why you have invested.
Yeah.
And if there is a change in your underlying, one should also be open, agile, and not attached enough to know to
Emotionally,
switch or make
yeah,
the decision.
yeah,
Yes,
yeah.
one should not be emotionally attached to what you have invested into. That is very, very important.
Right.
So I think these are the few things that a long-term investor must keep in mind. And lastly, and most importantly, I think today people also tend to get swayed by volatility. I think one should accept and embrace volatility. Volatility is not risk. Yes, but permanent loss of capital is risk.
Correct.
So one should in fact look at volatility as, periods or opportunity of, investing more or building the portfolio.
Right.
So one has to be very different, has to be very clear about,
What's the long-term goal?
What is
Yeah.
the long-term goal, and not getting, swayed by fads, FOMOs, volatility. So one has to be,
Absolutely, yeah.
disciplined and consistent to be able to sway through those cycles.
Yeah. I think that's a golden mantra which people should remember, not to get swayed with the ups and
Absolutely.
downs of the market, and think about the long term. I'll like to now zoom into our women audience for a bit. In your journey of the last 2 decades, आपने क्या चेंज देखा है विमेन माइंडसेट में, स्पेशली इन फाइनेंस, लाइक इन टर्म्स ऑफ इन्वेस्टिंग और इन द फाइनेंस इंडस्ट्री एट लार्ज? What changes have you seen, and what changes would you like to see which are yet to happen?
So to be very honest, I think through my journey of investment banking, research, sales, whether it was in the corporate world or subsequently once I started off the entrepreneurial journey where, we meet a lot of HNI, ultra HNIs, family offices. I think women are brilliant, whether it is executing projects, whether it is working with teams, whether it is running homes, on any of these counts, they are financially very, very responsible. But when it comes to converting that responsibility to decision making or investing, I think I still don't see that happening at large, or even, the surface being scratched.
Right.
Most women still shy away from making those investment decisions. So while women are financially responsible, they are not financially participative.
You think awareness is low or the intent is missing?
See, I think intent is there, acumen is there. It is just a couple of things, I think, like lack of confidence, fear, and also, social conditioning that, maybe men are better at investing, or this is that it is their domain. That still continues to run the narrative. And I think it is also a lot to do, the first two parts of it, which is basically lack of confidence and fear, also emanates from our, I think, educational system. I think that is one place where we really need to bring this change about, because through our entire education journey, you are not taught about investing. We are introduced to concepts like budget, saving, but it ends there. The next step, which is the most important part,
how to grow
your money, how to convert your, financial earnings or savings into investment so that that money starts working for you. That is, I think, a big gap in our entire educational system. And of course, that holds true for men and women both. But what happens is eventually, once men start earning, I think, it is given that they are supposed to be investing, and they take it in their stride. But for women, somehow to break that barrier or that mindset, the confidence is missing. So I think today what I see is, of course, because of a lot of information available thanks to technology, whether it's podcast, whether it is newspapers, news articles, enough and more is available for women also to read. But to move from that theoretical step to practical step, I think women need a little bit of hand-holding, maybe a little more safer space where, they feel more comfortable, because I think as women, somewhere we have this mindset that we can't fail. We are responsible, or we have that emotional burden of running the entire household, so there is some sort of security or responsibility that is attached to it.
So
that same goes, that same gets translated to the financial aspect of it, and you don't want to make a loss. You don't want to, allow yourself the permission to experiment. I think that is missing.
So the risk-taking appetite has to build.
Risk-taking appetite in terms of financial context. Today, if you see, women take enough and more risk. As multitaskers, or even if I go back to the Indian system of arranged marriage, you are taking the risk. You're
gambling your life.
You are taking a risk, of setting up yourself in a completely different household, environment, culture, but with a mindset that no, you are committed to it, and whatever it takes, you will build it, you will get through it. But that same, so I wouldn't call it just risk taking, but risk taking, converting it into a financial context. That confidence is missing.
Also, I think you mentioned social conditioning. Like more and more men need to see that women are able to take those decisions successfully. So role models like you, we need more such role models in the industry, I think, to change this mindset at large in the society. And that's my next question. You have been increasingly, talking about it, about how more and more women should get into investing, and you've become sort of a mentor for them. How did you get into this, or what all you have been doing? If you can just share with our viewers.
See, I think when I look at women around, like I mentioned earlier, even the most accomplished women in the in the best of fields, best of companies, still hesitate when it comes to, investing. And I am a big believer that somewhere women are very good can do very well at investing.
Yeah.
And there are inherent reasons for this, because to give you a very simple example, even if you look at our mothers and grandmothers, they ran the house in whatever was the budget given to them, right?
Yeah.
Now think about it, even in those days, whether constrained or not, they still figure out, what is the best product available within the, market that they had. They would still ensure within that they tried to give you the best of quality, yet have some savings. So, that analytical mindset that a woman has, you may not have it in a formal context,
Yeah.
but you're doing it, which I also call as common sense.
Right.
To a large extent, markets, investing is also all about common sense.
Right.
So I think women somewhere early on get that practical experience, through their lives, and it is only converting that into a financial context. So that is when, today even in my organization, I have almost about 40 to 50% who are women. And I constantly see how they, are hustling, especially in cities like Bombay, running from one end to other, trying to meet things. And that is where I felt the need that, I sit them down and tell them, or want to explain to them that, you run is fine, you're making money is fine, but now get your money also to work.
Yeah.
So, that's where it starts from, that, even if it is today, thanks to, instruments like mutual fund, even you can start investing with just 100 rupees, which is not a very difficult sum, right? So what I try to tell them that is, even take a small amount, but start investing. And I understand that, you may not have the expertise, acumen, or the knowledge. Doesn't matter, leave it into professional hands. So you can use mutual funds. Today you have an array of mutual funds. It could be equity, it could be balanced, it could be hybrid, multi-asset, whatever. But just start investing. So build that habit.
And be
get
consistent.
get into the habit of investing, SIP as we call it, because continuity gives you the confidence. So while you continue to build your active income or corpus, there is money which is also working for you. And I think women understand that also quickly, because anyways you're saving. So it is just putting that savings from your bank account or leaving it as cash in your cupboards to just giving it to somebody who is, going to grow it for you. And today, fortunately, you can just sell it the next day and get your money the third day. So those things also give a lot more comfort. And you can see your value every single day or every minute that you want.
Yeah.
So I think these things have gone in changing that, or bringing a lot more comfort to those savings also. So,
So that's on the investment side. Now today, if you meet someone, a young professional, a woman who wants to become a fund manager or build a career in finance, what advice would you give her?
see, first and foremost, I think I would like to tell today's generation that hard work is something which is very, very important and is non-negotiable. I see a lot of smartness today. Kids are super smart when it comes to technology, when it comes to application. But I also find that hard work and common sense are taking a beating.
Okay.
And I think those two elements are extremely, extremely important if one wants to pursue a career in finance, and actually for anything in life. Hard work and common sense go a long way. And I think one also has to, if you want to be in this field, one has to be patient. Because like I told you today, everything is available at the click of a button.
Right.
It's not going to come about so easily.
Right.
So it's very important that you patiently keep building on your skill sets, your knowledge, your competence. So technical knowledge is one part of it, but equally, which is your IQ, but equally important is your EQ. Because knowledge or your IQ can just take you or let you know where you want to go. But ultimately, it is your EQ which will determine whether you reach there or no. So I think it's a combination of these two things which is very, very important. And all along while we grew up, IQ was considered as the most important thing, which is why also I think men got associated or related to the finance field far more than women, because men are supposed to be thinking from the head, and women think both from the head and heart, which is why probably, it didn't happen in the context or in way where it happened for men.
Right.
But I think this combination of heart and mind can be a very powerful combination and makes women a better investor, I feel. Because ultimately it's the temperament which will get you to where you want to go.
I think more and more women need to believe that, truly believe that, and take it ahead, right, in this field. Women actually, you know what, in their life, they have many life stages. They go through life stages of, leaving their home when they get married, and then family responsibilities, kids, all of that, elderly parents, taking care of them. So over this journey, it becomes difficult for women to stay disciplined, stay consistent, and also adapt to the new things that's happening in the field of investing. What suggestions would you give women to kind of, balance life with investments and of course work?
Sure.
Yeah.
So like any other woman, even I have gone through this journey.
Yeah.
I think it is very natural for women because you have breaks, whether it's biological breaks or it is because of our cultural setup. So whether you get married, whether you have children, whether you have, relocation or change of career. So all this tends to, bring, small breaks in your career. But I think one thing which I always kept in mind was, come what may, I am going to continue working. And working only does not mean physical working, that you're going to a company or you have a corporate job or you're starting off on your own. But working also means working on self. So I think when my daughter was born, when she was 2, I took a break. Because I also think that formative years of your child's being are also extremely crucial, and what a mother can contribute, nobody else can contribute. And so for me, it was an equally important responsibility. So while I was on that, obviously I walked all along up till then. It was a good corporate life. I did whatever I could. But when it came to taking a break for motherhood, I decided that, no, I just can't sit still. What do I do? So I started investing. I started a different form of investing. In those days, angel investing, venture capital, investing into privates had just started picking up. So I started delving into those fields. I started learning about those because each kind of investing remains the same, right? Fundamentals, basic remain the same. It's just those nuances which change. The kind of people you interact with change. The stages at which the companies are different. So I started learning a lot more about those. So it was a great time to upskill myself, learn about newer things, but at the same time, I continued my SIPs. Like I said, your quantum can change. Your 2,000 or 20,000 can become 100, but it should not stop. So on one hand, I continued to upskill myself, and on the other hand, I continued my SIPs. So come what may, your SIP engine should not stop. The quantum can go small, can go down, but it should not stop. So that is one. And secondly, I think today it is very, very simple for us, come what the break may be, to be in touch with what you want to learn, what you want to be into, whether it is podcast, whether it is books, whether it is newspapers, whether it is, you create communities where you can have discussions. Today Zoom calls are so easy to do. There are a lot of, calls which happen in terms of, learning something or learning different aspects of new things. So it has become very, very easy to remain in touch with things.
Right.
So I think every break should not be considered as a break. But one should look at the other aspect of it, that it's just giving you time and space to do things or to catch up on things that, you could not while, being in an active role.
Right. And suppose there's a very young woman, a new jobber, who says, my father tells me to save, I save money, but I don't know how to invest. I know nothing about all these different products. So to that girl, what, from your own experience of how you started when you were a young girl, आप क्या उसको बताओगे कि अगले 3 से 6 महीने में these are the 3 steps, आप ये करोगे ना, then you can start your investment journey.
So when I look back, how I started my investment journey was, my entire salary, which was then way back in 2002, was 8,000 rupees was my first salary. So I invested the entire thing into equities. Of course, like any other, fresher, it's not that I had all the knowledge. So what I did was, I would pick up one, two things which came to me intuitively, and I would study a little about it and invest into that. And at the same time, I also had my father's money, and he had given me an open hand. The day you feel like you want to start looking at our portfolios and family investments, please do so. So I was nervous about managing his portfolio. So for his portfolio, what I did was I invested that into a PMS. Edelweiss then had a PMS, so I invested into the Edelweiss PMS because I did not want to take risk on his money without having the knowledge and the expertise. So both worked well because I was constantly monitoring his portfolio, seeing what were the changes happening there, how the fund manager was thinking, discussing, with different people. And alongside using that knowledge, I started building my portfolio. Now, in those days, information was not so easily available as it is today.
Right.
Today, you have podcasts, you have influencers, you have experts who you are, on TV, newspapers. You have enough and more to read. So, if you consistently, every single day, invest at least 30 minutes into growing your knowledge, this is one habit one must build every single day of your life. If not, read 10 minutes. If not, you don't like reading, listen to a podcast or listen to news, listen to experts speak. Make it a habit for 30 minutes a day. You can do that even while traveling. You can do that while doing anything, right? So it's not that difficult. So build and invest into yourself. That's very, very important.
I think very important tip for anyone young who's listening, young or old. I mean, this holds true for everyone who wants to build their portfolio.
So you take professional help. You start an SIP maybe with a fund manager. Stay invested. Continue to build yourself, and continue to know where you're investing. So whatever knowledge you have built and wherever you invested, it's very important to know what you have done. So gradually, over a period of time, if you are at it consistently, I think you will do well.
Right. And seeing the tremendous growth that Indian economy has seen over the last few years, where do you see what are the big calls that you believe in for the next decade for Indian markets?
We are very, very optimistic about India, and we have been so over the last 5-10 years. And I think all of us know the India story right now. Like, for example, I think even if we just take ourselves, 5 to 10 years ago, we were not so confident or did not share the self-respect or esteem as Indians what we have today.
Exactly.
I think wherever we go, whichever part of the world we go, Indians are acknowledged, appreciated and respected. And I think the government has gone a long way in, changing this image and doing things structurally and the right fashion to, change this image. So I think we are very, very optimistic about India. And couple of things, or trends or themes that we see emerging. So over the next 5-10 years, India as a country will do extremely well. But a couple of themes or sectors, if I had to name as, manufacturing is one which, about 5 years ago, we at Carnelian took a call that, manufacturing will do extremely well in India. And of course, it was not out of the blues. But post-COVID, we saw certain changes happening on ground, which made us believe that manufacturing is undergoing a renaissance, is undergoing a change, which we have never seen before. And if we capture on this well, this could become, a multi-decadal wealth creation opportunity. So 5 years ago, post the first wave of COVID, when companies were struggling to, come back into action, at that point in time, we took a call, manufacturing will do well. And over the last 5 years, I think manufacturing has done extremely well. But it's not that it is over. The game has just started. And like we all know, manufacturing does not happen overnight, right?
Yeah.
Just expansions take, anywhere between 2 to 3 to 5 years. So it's not an overnight journey. We continue to think manufacturing in India will do very well. Like I mentioned to you earlier, the breadth of the market will change. There will be newer sectors, sub-sectors, which will come about. there is a lot of, see, Indians were always entrepreneurial, but today you have an environment and regulations which are far more conducive for growth. So you will see a changing landscape within manufacturing itself. Having said that, I think, like I mentioned, across the board, whether it is financials, whether it is infrastructure, whether it is services, whether it is consumption, everything is going to undergo a rapid change, because it is the first level effect which will have a second and third level bearing across the board. So for example, today we all know that our biggest advantage is our population, our and our demographics, more so within population. Like today our median age is 28, which is the youngest in the world. China's is about anywhere between 30 to 35, and the West is aging. And China also suffered from, the one-child policy.
Yeah.
So I think we are in such a sweet spot, because almost 2/3 of our population will be working. Now, when you have a population that large which will be working, obviously they will spend, right? So consumption will pick up. Consumption across the board. Today we are highly underpenetrated on any count if you take consumption. Just to give you a small example, today if I just take, the hotel inventory in India, put together it is lesser than that of Dubai. Now Dubai is such a small, geographically, you cannot compare the two in terms of landmass, right?
Yeah.
So this is a kind of underpenetration which is there in India. So I think consumption will go a long way. Consumption will fuel manufacturing, services. Today services, when we talk about services, the only thing which comes to our mind is IT, right? But services is not only about IT. Today there are lots and lots of newer subsectors of services.
Hospitality, tourism.
Yeah, hospitality, tourism, medical tourism, education, consultancy, space. India has also set a mark in that field as well. So a lot more newer sectors will also come up. So I think this is a very beautiful phase, transformative phase which we are witnessing, and are, I think, very, very fortunate, because a lot of innovation is happening. There is a lot of factors which are going to enable that, or are there to enable that. So you will see a lot of transformation coming about. So if you are there, and with the right balance of IQ, EQ, attitude, you will go a long way in contributing to this growth journey personally, and also to the economy as a whole.
Now, a very pertinent question that our viewers always want to listen to. In the short term, which are the themes that you feel will be lucrative for investors?
See, I think short term, about 3 to 6 months, nobody can predict, right? Because like I was telling you, world has become extremely dynamic. Every day there is a new geopolitical situation which arises, and things constantly keep changing. So from a short term perspective, it is very difficult to comment on it. But having said that, I think banking and financial services, manufacturing, consumption, because see, in the recent past, over the last few months, the RBI has worked a lot, on improving the liquidity in the system, which was, big issue couple of months ago. Post last year after the election happened, there was a lot of liquidity crunch in the market, and RBI has done a phenomenal job of, working on interest rates, loosening a lot of things, and there's a lot more liquidity into the system. So RBI plus, so probably it has set a very good ground in terms of liquidity for growth. And also government has, brought about the GST cut. There were, tax cuts in the income tax budgets, so disposable income in the hands of consumer has gone up. So I think both these put together will ensure a lot more of consumption happening. So I think probably these themes will continue to do well.
And any themes that investors should stay away from for the short term in the next 3-6 months?
See, I would not say themes, but I would more so use it like as fads. Because today a theme may do well, but there are so many fads and narratives which get built, actually which are the spoiler, are the party spoiler. So one must stay away from fad. I don't think one should invest out of FOMO. Fad and FOMO today are, very, very big, blind spots which one must be aware of and stay away from. So marrying that, I think there is no theme as per se or a sector which is negative. One must also be very, very mindful about valuations, not get carried away, and invest mindfully. It's okay if you invest slowly, but invest mindfully, use common sense, and
Absolutely.
I think
Yeah.
you will do fine.
Okay. And मेरा आखिरी सवाल, just to wrap up this conversation, um, to every woman who's listening, about money and finances, आपका क्या एक recommendation या one line message होगा so that they carry it with them even long after this episode is done?
You don't need to know everything at the start to start. Just start. I think that is one thing which women investors must remember, to move from the financial savings to the financial decision making phase or investing phase. And just start is all I would say.
Well said. Thank you so much for such a lovely conversation. It was a pleasure, Swati, to have you on our show.
Thank you, Supriya. It's been my pleasure too. And I think through this conversation, even if there is one person who would start investing today,
Yeah.
I think I would be very, very happy.
Same.
Thank you.
That's it for this episode of Bazaar and Beyond. Swati, thank you for sharing your journey and for reminding us why women's voices in finance and leadership matter so much. If this conversation resonated with you, do share it with someone who's building their own path in markets or leadership. And don't forget to follow our YouTube channel. So stay invested, stay curious, and keep learning.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.